Mark Vergnano. Shares of Chemours are up over 150% so far this year. It's not bad in your first full year of trading after being spun off from DuPont. So I guess independence is suiting you fairly well.
No, you're right, Greg. I mean, we started last July, and if you think about it, we spun out of DuPont. So we think of ourselves as a startup company, but we've had a 200-year head start over most startups. So it's been great being independent from our standpoint.
And you are still transforming the company, and the way you're doing that, your strategy is through higher value chemistry. Talk about what that means.
So higher value chemistry to us is really all about high volume, high margin products. Our TiO2 business, where we're the largest in the world. Our fluoroproducts business, where we're the largest in the world. Very high margin, but very high volumes. That's where we're focusing the company.
All right, let's talk about titanium dioxide. You're expanding your manufacturing down in your Mexican plant. Talk about pricing, because I think this is probably around 50% of your business, right?
That's right. So our TiO2 business, titanium dioxide, really as we spun, part of the issue of our spin when we started was it was really at the bottom of the cycle and it drifted down a little bit. The cycle is now turning. We're starting to see pricing turn. We are starting up our Altamira facility in Mexico, as you mentioned, the largest facility in the world, lowest cost facility in the world. Actually, next week, we'll be actually doing our launch of that facility, so we're really excited about that. And
your coolant business is getting hot, right? It's doing better, your refrigerants.
A great way to put it, because our refrigerant business has always been a staple. It's about half the business of our fluoroproducts business. But we are introducing a new refrigerant, Opteon, which is very, very low global warming potential. One of only 2 producers in the world who bring this out. It's regulated in by the European Commission for vehicles, and we see a huge uptick with this product, and we're seeing it now and into the future.
All right, and only a few weeks ago, you sold off your disinfectant business. You're still slimming down. Talk about your debt load, because that was a worry earlier this year. I think it's probably under $4 billion now. So where do you want it to be by this time next year?
So you're right, we sold our clean and disinfect business. That was a third sale of a business. Our portfolio work is done. We brought $700 million of cash into our balance sheet. We started with $4 billion of debt. What we want to get to next year, by the end of next year, is down to more like a 3 times leverage. That's what our goal is. So the equation is real simple. You bring down debt by about $500 million, and you bring up your earnings by about $500 million, and that gets us to 3 times levered.
All right, and then finally, where are you with regard to the C8 litigation? Earlier this summer, the stock popped because they thought that the damages would be less than people expected. This is something that the short sellers are really counting on to hit your stock. Where is it right now?
Well, right now, DuPont is the defendant in those trials. We've had 6 bellwether trials. 2 of those have gone to jury under appeal. 3 of those have been settled out of court for very low amounts that were below the cost of our trying those cases, and 1 of those was withdrawn. So next trial is up in November, and we'll continue to try these cases. Again, DuPont being the defendant, but us being connected to that.
All right, well, thanks a lot for coming on and talking about Chemours.
Thanks, Greg.
And thank you for watching The Street.